Tesla's internal data shows the company has reduced its workforce by at least 14% this year. Yep. What are the implications of this for Tesla's operation and stock performance?
Usually this would be a point where I rail on Tesla, but I'm not. I think you have to cut costs if the stock is not performing well. Some interesting partnerships are being talked about with him and Dell and NVIDIA. So I think he's trying to find a way to be more efficient. And going back, Zuckerberg really ushered this era in of big CEOs being a lot more efficient. Shout out to Fat Man Scoop. I was talking to him this past week and he was like, why don't you hire more staff? And I'm like, why, if we have all these automation tools? And I was on this like in 2020. So I think people are just trying to find a way to be more efficient and give the investor class a reason to invest in the company long term. While they have a bunch of weaknesses right now in the company, they got to take some of their money off the books to be able to reinvest and reapply it into the company. So to anyone who's been laid off, my apologies and my prayers go out to you, but this is the right thing for them to do at this time while the stock is trying to find its way back above some of these moving averages.
Yeah, you got to have the bottom line number has to meet the expectation of the stock.
That makes sense.
And so part of it, and we talk about all the time, sometimes people are going to have to lose their jobs. And this is part of it. You cut jobs, but you have to do more with less. And obviously we've seen with AI, and they're creating their own AI. So you can understand why. I mean, this doesn't really shock me that they cut the workforce. I feel like if you look at the top market cap companies, we've seen pretty much all of them, outside of maybe Apple, who hasn't reported that large of a job cut. All of them have done it. Microsoft did it. We saw Meta definitely do it. We saw Google do it. I mean, it doesn't shock that Tesla's now doing it. People are going to do less with more. That's going to be something that's going to be continuous over the next 5-10 years. And so you got to figure out a way to make yourself more useful and make sure that you're able to prompt the AI that is going to be working with you or replacing you, pretty much.
And if I ask for $56 billion, I got to get some money off the books, because when y'all pay me, it's really going to throw the books in the shambles. So
that meet the bottom line number, man.
At all costs.
Yeah, at all costs, right. Yeah, so like even with the reports, when we were talking about when it was coming into its earnings, we saw a reduction in the amount of vehicles they were producing. We saw a reduction in the amount of sales. Having a job cut, I mean, that's part of it. So I would expect the next quarter when they report, obviously with the no delays being reported, we cut some jobs. I'd expect them the stock to tick up a little bit.
Stock opened up at 250 this year. It is at 189.
In light of the recent CDK cyber attack, which stocks could benefit the most from increased cybersecurity demand?
I think we talked about it, but CrowdStrike for sure. And shout out to all you cybersecurity companies that are paying people to go hack some of these so they can hire you. Well played, my boy. I think CrowdStrike will probably be the biggest benefit and have the most upside for sure. But as we become more dependent upon technology and especially AI, I'm really interested to see who is able to stop some of these issues from happening while using AI or thwart these attacks. But cybersecurity is only going to get bigger. I know it's not the most fashionable thing to talk about, but as we're more data dependent, more internet and technology dependent in every sector that we live in the States, these companies are going to be a lot more valuable. Sure.
I looked at the list where we had CrowdStrike. We spoke about them, loved them. Zscaler is definitely number 2. I see Fortinet and Cloudflare here. I think those are reputable, but I'm going to replace those two with a different two. I'm going to put Okta, ticker OTA.
Yeah, I like Okta.
So what they do, obviously these are all in cybersecurity. So they pioneer the identity and access management, which rethinks traditional security by using zero trust architecture. And that's another homework assignment. Look up the zero trust architecture so you can understand what the process of that is. And so that helps with identity management, which is important when obviously in cyber attack. But the other one, I think I would probably put at 2, or I'm not mad if they're 3, but Palo Alto. I think
they're better.
If I had to pick 4, it would be CrowdStrike, Zscaler, Okta, Palo Alto to watch over the next 5 to 10. Cloudflare I would put in as an honorable mention. But Palo Alto, they focus on protecting traffic into physical locations such as offices and data centers. What have we been hearing about NVIDIA in terms of its growth? Why is it growing? Because of the data center business. And so if they're focusing on data centers and offices and physical locations, you can see why protection there is going to be paramount over the next 5-10. Because if NVIDIA is doing it, you're going to see other semis in that space realize that, you know, we have to figure out how we capitalize on our data center development and the security around it. So I'm putting Palo Alto. I'm actually going to put it at 2.
Yeah, I agree. Because I would Zscaler and Fortinet. If I was on a dating show, I'd definitely pop the balloon on them. So Palo Alto I like a lot better. And wait till NVIDIA put some of this AI shit in the cloud in a couple of years. And a couple of rumbles. Man, it's getting competitive out here. It is getting competitive. Remember where you heard it first.
The real wars.
Yes. Put the AI in the cloud. Gonna be interesting.
Do small cap stocks have a chance to perform well by the end of the year? What are the key factors to watch?
Maybe, but I'm going to be very honest. Why invest in small cap stocks when the entire world has converged on a couple of sectors? Like, stop anti-trend investing. Like, there's two things you can do. You can either follow the trend or follow the sentiment, or you can go against it. The best investors will find a contrarian idea, but contrarian is not the same as going opposite of trend. We've talked about the Russell 2000 before, but I've always stated big tech is the way to go. Hence, 2 index. So can you find a gem in the Russell 1000, Russell 2000? Sure. The Bovespa, maybe. But I think you're setting your money on fire if you're looking to find 5 or 15 companies in the Russell 2000 that are going to outpace what's happening in S&P and NASDAQ. So will it go up in aggregate? Yes. But I think we have a clear leader in the S&P, NASDAQ, and then Dow. Those I would look at as like alternative investments, if you will, because they're never going to be the leader.
Yeah, it's tough. The economic factors have just not worked in its favor. So when you're talking about small cap stocks, and for those who are new to the show and may not have known what a small cap is requirement, so it has a market capitalization between 300 million and $2 billion dollars. I mean, it's tough, right? When you pick the small cap, number one, they're volatile, and 2, they're less likely. It's less likely to be profitable. And so when you think about those 2 factors, volatile, less likely, that doesn't sound like something you should invest in. Can there be diamonds in there? Yes, but when you're talking about interest rates at the rate that they're at, does that help small cap businesses? Not as much, right? When interest rates are lower, it costs them less to do business. They thought there was going to be 6 rate cuts. That would have been an indicator to say, okay, these are some of the business you can invest in. And then AI. I mean, you need capital to participate in that space. So if you're growing your business and you got to have that as a capital expenditure, it makes it tough to grow your business. So will they rebound at some point? Yes. I don't know if it's by the end of this year, because people are going to continuously invest in the growth stocks and the tech companies that are making the money now. It's tough for me to tell somebody to say, hey, go invest in one of the companies in the Russell when NVIDIA is performing the way it is, when TSM is performing the way it is, when a Qualcomm or an Apple are performing
AMD, Italy. We can go to other sectors and just bigger winners. ExxonMobil, it looks like a tech stock. And the Russell 2000 hasn't hit a new high since 21.
It's tough.
Come on.
Yeah. But those economic factors change, then that might be an opportunity to maybe look at some of the companies there.
Yeah. But I can't name maybe 10 years that the Russell 2000 outpaced the S&P or NASDAQ in gains. It's usually like a way to offset your portfolio as a hedge.
Right.
But as a leading index to invest in,
what would you say for a beginner investor? Would you recommend that? Because I mean, when people look at it, number one, they look at it and say, hey, it's cheaper. Yeah, and this is almost like when we tell people, hey, are you trying to hit the grand slam, or are you going to go with the batting average?
That's the reason why it's cheaper. And just because the price is lower doesn't mean the return will be higher, i.e. my competitors. Yeah, he costs. I hear you, but there's a reason why certain things cost, because the value and the premium to the upside and the expectation of return or gains. I mean, I've traded the Russell 2000 on the future side for damn near 8-9 years. ES is a hell of a lot easier to trade as a result, and the companies in it are a lot more stable. Yep, and if you look at it, the S&P and NASDAQ has less volatility now and is giving you the returns that the Russell or the German DAX used to give you. That's why I say everybody on earth is your competition. For a long time, it was 7 to 12%, 15% if you get lucky. Now, VOO, VGT, SPY, they're giving you more gains than that with less drawdown and more buyers in.